Hello friends, welcome to the Finance channel. In today's video, I will offer you 10 investment advice. Have a good time. The sooner you start first, the better, so start investing in younger life. Erken Basleyen. Eğer bilecek fazın en olduğunu bilmiyorsanız, öğrenin. Çünkü bu sayı gelecek için haykınlanmaya başlarsınız. Let's say you are building a house. Wouldn't it be nice if you just laid the foundation of the house and then the house built itself? That is the power of investment. Investing allows your money to grow rather than sit idle. Any return you earn when you invest is added to your investment, and your future earnings continue on this ever-growing investment. For example, if you invest $10,000 with an annual return of 6%, you'll have $18,000 after 10 years. After 30 years, your investment reaches $60,000. The sooner you start investing, the longer your wealth will have to grow. You can calculate your possible future earnings using compound interest calculator. Create a financial plan. Have a plan, period. If you can make your own plan, that's perfect. Financial planning isn't just essential for retirees. On the contrary, it is much more important to have a financial plan early in your life and career. Making investment choices, or even choosing what type of investment account to use, can be quite complex and overwhelming. Doing financial planning at the beginning can provide a roadmap for the future. With an outline of criteria such as financial targets, timeframe, and risk ratio, you can more easily answer the complex questions mentioned. Don't try to predict the market. Predicting the market is a challenging task, even for professionals. As this is the case, trying to make predictions with intermediate information also becomes an extremely risky business. It would be much more sensible to reduce risks by having a diversified portfolio rather than investing in a single paper or industry. Calculate long-term. Clients need to set their emotions aside and reduce confusion when investing. These people are faced with a 24-hour news spiral that aims to scare social media and the general public. Considering investments as a marathon rather than a 100m run is a must-have habit to get rid of the first thought of selling when the markets drop. Even with the biggest dips, you'll find that it's not so scary when you invest long-term because there is time to recover your losses. Invest in the stock market. If you are already considering a long-term investment, short-term statistics are not so important. Because it is a scientific fact that the stock market wins in the long run. It is thought that the value of assets managed with this technology, which emerged in the USA after the 2008 global crisis, is around $600 billion worldwide, and this figure will exceed $1 trillion by 2022. Finally, remember that investing in the stock market will help you save on taxes. There is no obligation to file a declaration for the gains from the disposal of stocks traded on the stock exchange, and therefore no tax payment is required. Invest in your career. What will happen to the economy in the future? Will the stock market go up or down? How much will real estate prices increase? These possibilities are completely out of your control, but there is one thing you can control: your career. The year 2022 may be the year of opportunity for you to invest in your career and therefore your future more than anything else. Ask yourself this question: what can I do to develop my career? It doesn't matter if you run your own business or work for someone else. Are there development opportunities that can make yourself more valuable and indispensable for your business or employer? In 2022, you can at least do a lot of reading and research to increase your knowledge and skills. Do additional business as an investment. By researching ways to earn additional income, you can ensure that 2022 will be a record year in terms of your income. You cannot achieve this success simply by keeping your current job. Doing extra work plays an important role in achieving your financial goals, whatever they may be. Do not conclude from this that you should beat yourself up. You can find loads of jobs that you can define as just spending your free time. For example, if you think you have potential in the field of writing, you can consider doing freelance copywriting from your home or where you live. Invest in your debts. Reducing your debts is also a form of investment, and you look at it from the opposite angle. Debt causes gamma at night and humiliation during the day. Prioritize closing your debts rather than investing while in debt. If you have a loan, try to restructure your debt or close your loan, if you can, to reduce the interest burden added to the principal. This is of course not easy. For example, in the use of credit cards, people make a habit of making the minimum payment, which causes interest on the remaining amount and puts borrowing into a negative cycle. Even if your debt balance is small, the interest burden is increasing. Imagine that a total of 10 years monthly interest is charged on your loan debt or credit card expenses. Closing your debt is equivalent to getting a 10 years return. In short, how far is it from interest debt? Invest in your health. Take your health very seriously in 2022 and therefore invest in your health. Another aphorism describing the relationship between health and money is attributed to Goethe. People spend their money first on their health to earn money, and then their money on their health. Give importance to this job before you lose your health. Watch what you eat and make exercise your lifestyle. If you have a habit that is harmful to your health, quit. Prioritize your mental health as well as your physical health. Distance yourself from the things that make you stressed and unhappy. Focus on activities that relax you. Do not forget that doing sports will make a positive contribution to your psychology as well as your physical health. Engaging in a hobby will also help you relax and get away from the daily routine and stress. And finally, we say gold. As you know, gold has been a first-degree investment tool in our lives for years. Especially if we consider that the prices peak during the economic crisis, which happens every 10 years on average. Investing in gold can be much higher returns in these periods. In times of crisis, such as illness, war or natural disaster, gold is a shelter for those who want to be confident. However, expectations that the virus will end in 2021 are also likely to weaken gold prices. We recommend that you make a decision by keeping this in mind and following current developments. Thank you for watching my video so far. See you in the next video. Have a good time. Don't forget to subscribe to the channel and like.